Disney, we just talked about it, initiated a buy at Goldman Sachs with a $137 price target. Goldman expects Disney's theme parks and studios to fully recover post-COVID-19, whenever that is. And the analyst thinks that investors are also undervaluing the Disney Plus TV service's profitability. It is one of your calls of the day. Jim, you own it. You agree.
I do. I'm gonna leave aside the talk about Disney Plus because that doesn't vary from day to day. What does vary from day to day is the theme park reopenings and the studio reopenings. And you saw last week the stock rallied as Disney World opened. There is more room for theme parks, particularly in California, to open. There is more room for the studios to reopen, and each of those should be positive, just like you saw for Disney last week. So I think in short order, this could be in the mid-130s.
Okay, also, Jim, stay with you because same space, same company. Viacom, CBS, initiated with a buy also at Goldman. They've got a $34 price target on it, which is a whopping 47% upside. This is a company that's been kind of left on the scrap heap of media, Jim. Goldman coming out optimistically here. You still own it. You want to sell into any strength?
Sorry, I'm chuckling at much of what you just said, including the charitable way you said it's been left on the scrap heap. I mean, it's been left underneath the scrap heap, Brian. I know, I appreciate it. Look, I think there is more room to run here. The interesting thing in the note, different from Disney, is they are highlighting the streaming service of CBS, which honestly, I don't think it's getting anywhere enough play. They've actually got a few irons in the streaming fire. It's not just CBS All Access, it's Pluto TV. I actually think it's really undervalued on the basis of their streaming business.
All right, we're going to move on now because if Viacom CBS is under the heap, or had been, as Jim said, Netflix is probably on top, or maybe is the heap. Netflix up again today, another new high, $565 a share. So, Shannon, I know you own it. It is now closing in on nearly $100 above the average price target of the 30-plus analysts who cover it. So again, like Apple, either we're going to have to see a wave of price target increases or the other option. What's your take on Netflix earnings out later on this week?
Well, I trimmed the stock back in late April, and so obviously that was a great decision. No, I mean, in all seriousness, I think that what we're looking for out of the earnings is just continued transparency on how much of the subscriber growth here in the U.S. has been pulled forward and what the expectations are for the back half of the year. They're saving money right now because they can't produce any content. And so therefore, all of the concerns that we heard at this time last year about the amount of money that Netflix would have to pay to continue to build their library, that's going to come back. And in order to maintain the subscribers that they have currently and continue to grow that, they will need to invest in content. I think the international business is going to be important because that is it's an easier way for them to monetize existing content. And so I think what we're looking for is transparency about subscribers over the next 6 to 9 months. But it feels a little pricey right now for me, but we could continue to see it, appreciate it through this earnings call.
Yeah, look at that 42% gain over 90 days.